Hey everyone, it's Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. If you want to get connected with the UVH fam, our community, links are below in the description for our Discord and our free options trading group. And if you like our live stream, we moved it to a new channel. Link is in the description as well. You can subscribe there. But what I want to talk about is NIO stock. It was pretty hot today. People are making tons of money left and right. You know, whether you're trading the stock or the option, the stock actually closed up 53%. But before we get started, just want to let you know this is my own opinion on the stock, not investment advice. So I just want to put that out there. I'm just going to be going through the financials, what I think about the stock. Do I think it's going to recover where it's at currently, in the overall situation with NIO and where they've been, where do I think they're going. So, you know, NIO hit an all-time high. They IPO'd in 2018. You know, they hit about $13. They hit $13. They hit $13.80 a share. They came down recently as low as $1 a share. I mean, 2019, it just got cut. I mean, hit a high at 10 and just got cut. Earnings after earnings report just got cut down. You know, last time it ran up was back in March, ran up before earnings, and then the report was the overall catalyst for it to drop lower. Now, today it did run up all the way to 487, 488 area before getting knocked down, closed at 372. So it was up like 80-90% today, closed at 372. However, for me, looking at the 1 year chart, there's a couple hurdles we need to get over, and you know, these wicks are kind of dangerous. So, you know, I definitely would like to see it above 4. Today it was above 4, but it didn't hold above 4. And then also above the 5 area, I'd like to see it close above 5 before we start saying, hey, it's going to recover into the 10s. You know, people get really excited when a stock like this goes from $1 to $5, and they think that it's going to solve all their problems. So what I suggest is everyone do their own due diligence, look into the stock, look into the stocks that you're investing in. If you think it's going to the moon, you know, you have to have the data that backs it up. You know, I know the market is irrational. The market does what it's going to do. You know, I'm sure today, once they got on a bunch of people's scanners for the penny stocks, keep in mind this is still a penny stock, you know, under $10, still a penny stock. Got on a bunch of people's scanners, probably a bunch of penny stock traders jumped on this, you know, ripped it up, and then that's why you see such volatility today. If you're looking at NIO on the daily, I mean, this ripped up. Let's see here. Yeah, I mean, it ripped up from 295 to 487 back down. Very, very penny stock pump and dumpish, you know, with NIO. But we're going to go through the financials real quick. And what I want to point out here, a couple things. So it went up due to better than expected earnings. Let me actually make this a little smaller. So this is from the actual NIO website, where they posted their financial statements. We'll talk about the CEO comments, their financials, and everything like that. You know, they went up due to better deliveries. They delivered a total of 4,799 vehicles, ES8 and ES6 vehicles in excuse me, in the third quarter. Still battling a little cold here. So they delivered almost 4,800 in the third quarter, which is up. Since 2018, they've delivered 30,000 vehicles. They're saying they're going to, they expect over 8,000 vehicles to be delivered in the fourth quarter, a record of quarterly deliveries in our history. So there's a lot of good. They beat on revenue. They beat on their profit expectations, which were not high, let's just say. But for a company like this, you know, relatively good. What I do want to say before you get too excited about all of that is, let me pull over some of the financials here. You know, looking at the financials. So the revenue was good. However, it didn't quite beat the Q4 2018 revenue. It wasn't like an all-time beat on revenue, and as you can see, revenue is kind of spotty. Revenue jumped up, and from Q3 to Q4, Q2 to Q3. I mean, it jumped up and then it declined in Q1, and now we jumped back up in Q2, but it doesn't show constant growth. I mean, Q1 really broke this, and what really set it back down to moving down to the dollar was that last quarter. And meanwhile, this quarter was good. Deliveries are good. They're not out of the woods. They still, if you look through their income statement and their balance sheet here, I mean, they're a mess. I mean, net income, they're operating at a loss month after month, quarter after quarter. They're not making any money. The company operates with continuous loss and negative equity. The company's cash balance is not adequate to provide the required working capital and liquidity for continuous operation in the next 12 months. The company's continuous operation, which has constituted the basis of preparing the company's third quarter unaudited financial information, depends on the company's capability. Depends on the company's capability of sufficient external equity or debt financing. The company is currently working on several financing projects, the consummation of which is subject to certain uncertainties. The company will announce any material developments or information subject to the requirements by applicable laws. So, NIO gives a lot of news up front, and then at the tail end, where their balance sheet is saying they operate at a loss, they don't have the liquidity to carry them over the next 12 months. And this is where you got to think about when you're a shareholder. I mean, if you're a trader, trade the ups and the downs, it could be fun, right? But we're talking about buying stock, being a shareholder for the long term, and is this a company that you can believe in? And would you put your hard-earned money towards a company that doesn't have enough liquidity to last them the next 12 months? And the only reason why they will last the next 12 months is if they refinance their debt or they get external equity, which, I mean, if their share price goes up, they're going to get the equity that they need to sustain themselves. But if this pop is very short-lived, if this pop can't push them over the edge, they're gonna have problems. Like if this comes back down to, the same thing was happening with like Sears and stuff. You go under $1 and you're under $1 for a long period of time, you're at risk of getting delisted. Sure, you can postpone it, you can reverse split and all this stuff, but that's just like band-aids. Thankfully they haven't done any reverse splits. I mean, they hit $1.19. They're still moving up a little bit here. They recovered after hitting $1. They were resting around $1.30, $1.50 for the longest time. So the question is, looking at their finances and their liquidity, short-term things are suspect. Yes, they're planning on delivering 8,000 vehicles in the next quarter, which is up from this quarter, which was almost 5,000. So that's big. But the question is, they're not talking about profitability. They're still losing money on each vehicle that goes out the door. They're not liquid enough to sustain the business they have without refinancing their debt or getting external equity, external funding. So, they're operating at a net loss quarter after quarter, month after month. So we'll see if this is sustainable. So, for the people that want to shoot for the moon, I think it's going to be tough for NIO in the very short term. If it can, what I would like to see is a couple quarters of growth and improved on their finances. Then I could see putting my money in there, but there's really no reason for you to put your money in here. Yes, you could have caught it at $1 and pushed it up to $3 and made 300%. But if you're trading options, so your normal options trader, which we are at Us versus Herd, 300%, 100% isn't really enough money for you to tie up your capital for a year or 2 years, So, but if you're looking at NIO for, hey, this is going to be the next Tesla, or the odds are definitely against them. Tesla definitely has the upper edge. Financially, they're a mess. They're publicly admitting it. You can go to NIO.com, go to their news and events, and go under earnings, and you can see, what is going on with their financials. I mean, it's right on their website. They're open about it. They're saying they don't have enough liquidity for the next 12 months. So, I say I would much rather be a short-term trader on NIO right now if it's moving a lot than being a stockholder. So for me, I'm going to continue trading options on it. A lot of options today. I mean, if we look at NIO, the four strike. If we look at the 4 strike today, I mean, it was all over the place. Right now, it's at 26 cents. But I mean, the 4 call strike for this week expiration, literally went from 6 cents up to $1.65, down to 26 cents. I mean, this was tens of thousands of percent up today. It did close up 166% up today, but that was only 26 cents. When it was at 165, we're talking about tens of thousands of percent. So before you get too excited, penny stock traders, with the 50% or 80%, us options traders, we're grabbing the bag on the 800%. 10,000% on these NIO options today. There's a lot. I didn't personally trade it because I'm still seeing what's going on. But there's a lot of people in our community that did trade it, made a heck of a lot of money. So for me, financials are a mess. They have a lot to prove, and they may not have the liquidity to last in the next 12 months. On the other hand, I think it's going to be a very fun stock to start trading options on, especially if it starts swinging $1 at a time, 50 cents at a time. So, those are my thoughts. Leave me your thoughts in the comments. If you liked the video, hit the like button. Definitely appreciate it. As always, stay safe, stay green. It's us versus herd.